Коллеги, добрый день.
Colleagues, good afternoon. Thank you. Let us begin. We are glad to welcome you at the press conference of Elvira Nabiullina, Bank of Russia governor. First, she is going to make a statement in follow-up to a Board of Directors meeting. Good afternoon. Today, the Board of Directors of the Bank of Russia has decided to hold its key rate at 7.25% per annum. Let me highlight the factors we considered while making this decision. First, we have updated our inflation forecast to reflect a number of both internal and external factors, of which yesterday's proposal for tax changes is key. Although the VAT increase is planned to take place starting from 2019, a certain pro-inflationary effect from this move within this year is not ruled out, coming through the changes in inflation expectations and a faster price correction. As a result, inflation will move closer to 4% by the end of 2018, to an estimated range of 3.5 to 4%. It is possible that inflation will rise to 4 to 4.5% in the course of 2019 on a short-term basis. The effect from the tax changes is set to run its course in early 2020, when inflation is projected to return to 4%. As for other factors, they have a mixed impact on consumer price movements. We estimate that this April's weakening in the ruble on prices is moderate. We saw inflation accelerate a little across individual product categories which are traditionally more reliant on exchange rate fluctuations. These include, for one, outbound travel, household appliances, and electronics. Viewed overall, non-food products showed a more muted reaction than one could have anticipated. Importantly, households' reaction to the ruble weakening was mild to consumer behavior remained almost unchanged, with no significant increase in demand for foreign currency or undermined attractiveness of ruble deposits. The next factor is petrol prices. Petrol prices rose at markedly faster rates between April and May as oil prices climbed, excise duties were increased early this year, and the ruble weakened. The rise in petrol prices proved a key contribution to accelerated price growth in phone foods. We expect that the reduction in fuel excise duties is expected to make a constraining impact on petrol prices. Food price growth in May came in even below our projections. Reliance on imports and seasonality factors is declining on the back of positive developments in agricultural production, including on the back of greenhouse construction. As a result, the response of food prices to exchange rate volatility is also diminishing. There was a certain rise in the differentiation of price growth rates across Russian regions. Inflation accelerated in large regions with the highest income levels, driven by these regions' high consumption of petrol, other non-foods, and services related to outbound travel. Some other regions, on the contrary, saw a slowdown in inflation. I refer to the agricultural southern regions, where fruit and vegetables are more affordable. The share of food in the consumer basket is larger. Having said this, inflation throughout all regions but one remains lower than 4%. The rise in petrol prices combined with exchange rate volatility sent household and business inflation expectations higher in May, with their readings having returned to those seen between late 2017 and early 2018. As I have mentioned, a further impact on inflation expectations is poised to come from the upcoming tax changes. The duration of this effect is of crucial importance to us. That is, we must understand how soon inflation expectations will resume to decline and whether they can prove stubbornly high. This determines, among other things, the ultimate implications for inflation. The second factor is monetary conditions. Our estimates suggest that they have moved close to neutral. As you'll remember, the neutral key rate range is 6 to 7%. Following the developments of April and May, our estimated neutral interest rate currently appears to be closer to the upper bound of this range. Nevertheless, at this point in time, we cannot afford the remaining one or two downward steps in the key rate, which would take us to fully neutral monetary conditions. The realized inflation risks spell the need to carry on with a slightly tight monetary policy stance. Our projections suggest that this will so far prove sufficient to curb secondary pro-inflationary effects for the planned tax decisions. As regards lending and the propensity to save dynamics, their performance is aligned with our expectations. On the whole, moderately growing household lending fosters a continued rise in consumer demand. Its movements are, however, within our estimated range, bringing no financial stability risks. Let me now speak about our medium-term outlook. It has been updated to reflect the recent fiscal policy decisions and with regard to external assumptions. Oil prices exceeded our expectations to the effect that we slightly upgraded the estimate for the year from $61 to $67 a barrel on an annual average. At the same time, the impact of this factor is limited. It is said to be leveled off by the fiscal rule, while state regulation will neutralize its implications for domestic fuel prices. As expected, overall output on the whole and industrial production growth rate accelerated in the first half of 2018 after a slowdown at the end of last year. Nevertheless, Q1 GDP growth was somewhat below our expectations. This was primarily associated with the performance of construction and investment. Growth in the output of consumer goods remained stable, driven by sustainable consumer demand. We have retained our GDP growth projections for 2018 onwards at 1.5 to 2%. This forecast has yet to factor in all the fiscal measures which were partially revealed only yesterday. These need additional detailed calculations we will provide in future. As of now, we see certain risks of a downward revision of 2019 GDP growth forecast, given that the VAT rise will translate into prices of goods and services as well as consumer demand dynamics. In contrast, the forecast GDP growth from 2020 onwards may be revised upwards, however, if the projected measures are efficiently implemented. We have somewhat revised the balance of payments forecast. The updated estimate suggests that the 2018 current account balance will stand at $85 billion, that is 5% of GDP, against $59 billion projected in March. This mostly results from higher oil prices. That said, we can see that growth in non-commodity export is also sustainable. Higher export proceeds are said to translate into growth of forex assets in the private sector. The new sanctions against Russia and the increased volatility in global markets are poised to bring down foreign investment in Russian companies. As a result, the negative financial account balance in the private sector will be somewhat higher in 2018 than expected in March. It's going to total $30 billion. Milder revisions were made for the 2019-2020 balance of payments forecast, with medium-term trends remaining unchanged. The current account balance will decline amid oil price adjustments, but remain sustainably positive at roughly 2% of GDP in 2020. Consistently, the negative financial account balance and the private sector will shrink to $16 billion in 2019 and to $12 billion in 2020. That is 1% of GDP. Finally, some words about pro-inflationary risks, the balance of which have shifted upwards since March. Most of the fiscal policy measures, which had been under discussion and created uncertainty, gained perspective yesterday, becoming more clear. We will update the scope and scale of fallouts from these decisions for the economy and inflation as new, primarily expense-related data emerge, and as economic agents start to respond to these changes. Given that inflation will now bounce back to 4% faster than we expected, any pro-inflationary factors enhance the likelihood of consumer price growth outpacing the inflation target. That is, there will be no cushion that we have with inflation, say, at 2.5%. Therefore, we will be more cautious in our policy. External risks, to a certain degree, have also been in place since March. They are primarily associated with global financial markets and geopolitical environment. Although the past events had quite a moderate effect, we still cannot rule out a potential downfall in the future. Furthermore, there are high risks of trade wars, which may slow down global economic growth. All of the above may translate into the exchange rate, inflation, and inflation expectation. Other risks, for one, remain moderate. Let me say once again, when updating our forecast, we will assess the impact of the government-proposed measures, not only on inflation, but also on economic activity. We expect that their successful completion will accelerate economic growth rates. To conclude, I'd like to congratulate everyone. The World Cup opening, it's an important event for Russia. According to our estimates, it will have an insignificant effect on inflation, which will be short-lived and affect only individual cities and categories of goods and services primarily consumed by tourists. That said, such a large-scale international event will back up output growth in the second quarter, and as of year-end, it may contribute up to 0.1, 0.2 pp to GDP growth. We do hope that the World Cup will have only a positive effect on both expectations and sentiment of both Russians and our guests. Thank you. Colleagues, let us move on to questions. Anton, please. Please do not forget to introduce yourselves. Anton, RBC. Well, there's been always said about the deficit of resources. Yesterday, the government announced an increase in the pension age. Do you think the format in which it was announced, does it level off the risk? Has it been exhausted, or maybe additional measures are needed to avoid that from happening? To a significant extent, yesterday's decision is going to have a positive impact on the labor market. There is going to be more people involved in economic activities, and yet to avoid the deficit of labor force, given the demographic situation in our country, we have to first and foremost look into raising the labor productivity, because it is increased labor productivity, increased yield is the priority area we've got to pursue. Another important factor is geographic mobility, which is required, as well as mobility within professions and jobs, because that will also help us to level off this deficit of labor forces. We believe that right now the unemployment rate is very low, close to the equilibrium level, but in certain countries the equilibrium level can be lower, and it can be lower in us if we remove the bottlenecks and the structural problems, if we achieve this interprofessional mobility. Colleagues, Gulnara, please. Gulnara Vakhitova, RIA Novosti. Madam Governor, last time the central bank announced that it still expected transition to neutral policy in 2018. This time the press statement sent a slightly different message. It has been said that the transition will be slowed down, but no concrete dates have been given. Can you elaborate on that? And secondly, how will the VAT increase impact inflation? You said it is going to worth around 0.1% or around 1% point. Do you have any more to say about that? Thank you. The range of the neutral key rate has not been revised. I mentioned that already. But the probability of transitioning to neutral monetary policy this year has been reduced significantly. We believe that most probably the transition is going to take place next year. We do not rule out that we'll transition to such a monetary policy this year should the inflationary risks not be realized, if the pro-inflationary expectations are going to be decreased and not increase despite the fiscal measures, and if there is a combination of positive factors. If such positive factors do combine, then we might transition, but we think that most probably the transition will take place next year in 2019. As for the calculation of how the VAT will translate in inflation, we have to have a look at other factors such as the fiscal system adjustments. The calculations are going to be made later. Right now, it is just a preliminary estimate, 1 or 2 percentage points. We cannot say how it's going to be reflected this year. The international experiences say that there are different examples. Sometimes this effect can play out before the decision has been taken, or sometimes afterwards. We'll have a look how this adjustment of prices is going to play out, and we'll have to assess the trends. We cannot give concrete estimates whether that is going to play out this year or next year. It's impossible. Colleagues, Olga, please. Bloomberg, Olga Tanas, if you allow me 2 questions. First, given the fact that the transition to neutral monetary policy is most probably going to take place next year, is it possible that the rate can be increased in the remaining part of this year, given the pro-inflationary risks? And this second question about the capital flows and the developing markets. This month, the head of the Central Bank of India has written a column in financial press calling on the Fed to somewhat slow down the normalization of its monetary policy. Would you join this call? Do you see any risks for the ruble? Thank you. The scenario is as follows. No increase of the key rate is going to be needed. And yet, if there is a combination of factors that will lead to a significant spike in pro-inflationary risks, we cannot rule that out, because our most important goal is to stabilize inflation at 4%. Maybe I'd like to draw your attention to one factor. An increase in the VAT is a one-time thing, and it is supposed to lead to one spike. But the thing is, inflation expectations are not anchored in our country, so there can be spillover effects, there can be secondary effects, and these can be translated into prices on goods on which VAT is not going to be increased. If we had our inflation expectations anchored, if all the economic agents had acted viewing this VAT increase as a one-time thing, then we would not have needed to use monetary policy to influence that. But since the inflation expectations are not anchored at this stage, we have to lose our monetary policy slower than anticipated previously. Once again, we believe this little tightness of the monetary policy that still remains is going to be sufficient. But if that is required, we cannot rule out other scenarios. As for the normalization of the monetary policy, no doubt, this normalization in developed countries is going to have an effect. It's going to have a negative impact on developing markets, including Russia, first and foremost through a change in the capital flows and their directions. This effect, as we can see, is being seen in different countries. The first one to be hit, and the strongest, are those who have internal imbalances, either a large level of indebtedness because they have to service it at a high price, if they have a big deficit of the current account, other factors that are seen by investors as negative. And we can see that many developing markets are already undergoing significant outflows of capital. But this process, to a certain extent, is going to affect everyone. And we understand that full well. The share of non-residents and the federal bonds has decreased. If you look at the period from April the 1st, it has decreased from 34 to around 30%, together with the sanctions that translated into a decrease in yields around 60 basic points. This is a moderate effect, but this is going to happen, and we have to be ready for that. That is why we have to be very cautious in our policy, and we've got to maintain all the cushions, the buffers that we've got. But I do not think we have to hinder the natural process of the normalization of monetary policy, because if there is a lack of normalization, if loose monetary policy is in place for too long, then this will also be fraught with risks for the global economy, such as the risks for financial stability, the risks of bubbles popping up in the market, and that is why normalization is required. Yes, there are going to be spikes in volatility, but we believe such spikes in volatility in international markets are going to be less numerous than it used to be the case in 2013, when a possible withdrawal from QE was announced. Right now, the global economy is growing at a steadier pace. Back then, the growth rates were lower. Right now, the rates are better, and we do hope that trade wars are not going to be erupting to full extent and are not going to hinder this economic growth. Colleagues, Anastasia, please. Good afternoon. Interfax Agency, Stilova Anastasia. A question related to that. Do you expect that this decision to maintain the key rate at 7.25% and transition to a neutral policy in 2018, do you think these measures will help you raise the attractiveness of Russian assets for foreign investors, including do you expect non-residents getting back to the federal bonds market? Do I understand you correctly that the neutral policy that you've announced, the neutral rate, you think that there is no potential to further decrease the key rate this year? Do you think it's impossible? Maintaining the key rate will first and foremost allow us to stabilize the inflation target. Our key rate policy, first and foremost, is intended to affect inflation. On the whole, we believe the macroeconomic policy in general, both monetary policy and the fiscal policy combined, so far, do not create more risks for the Russian economy than for other emerging markets. Yes, a certain outflow of foreign investors is happening, but it doesn't create any additional volatility risks. And we believe this trend is going to stay in place for some time. Certainly, a lot will depend on how attractive we're going to become in economic terms if investors see that the economy can rise, can grow at an accelerated pace, then the attractiveness can be greater. The attractiveness of our assets is not just about our key rates. It also includes the potential for growth, the risks, the key rates. The investors have a broader look, but our base scenario outlook does not include a significant decrease in attractiveness of our assets. As for the decrease of key rate this year, we do not rule out that this can happen should the positive factors combined. I've already told you that we do not rule out that we'll transition to neutral monetary policy this year, even though the probability is very much lower than it used to be. But if the positive factors are there, then it can happen. Colleagues, go on, please. Margarita. Could you please say whether the pension reform is going to affect the macroeconomic indicators, and in what way? Well, there are many macroeconomic indicators. Certainly, it is going to have an impact upon certain indicators. We have already talked about the labor markets and potentially higher output, because there's going to be a slighter risk of a deficit of labor resources. This all requires additional calculations. As for our purview, our field of competence, in terms of an impact on monetary policy, we do not see huge potential effects, at least in the short term or in the mid-term. Colleagues, please. Any more questions? Yes, please. The third row. Madam Governor, RIA Novosti, Igor Shachenbeck, I've got a question. The latest fiscal decisions, such as an increase in VAT and the pension age, according to your forecast, how can this affect the inflation expectations of the population? What effect will it have? Thank you. These decisions can have an impact on inflation expectations. They can raise these expectations. And we're going to follow it. We do hope that the increased inflation expectations are going to start climbing down, but that will depend on how the real inflation is going to behave. Very often, inflation expectations rise on the back of expectations of certain decisions. But the most important thing is what is happening to the real inflation with the current inflation rate. Moreover, it is associated with petrol, utilities, foods. The changes in prices on these categories of goods have the most effect on inflation expectations. So a certain increase is possible. And for us, this is going to be a factor upon which we're going to base our decisions. Colleagues, as you ponder on your questions, I've got a short statement. The thing is, as you know, our press conference is followed not just in Moscow, also in regions and other regions, and we sometimes get questions from journalists from the regions. And starting from our today's press conference, we'd like to give them a chance to ask their questions to the governor. So let me read out one of the questions to Madam Governor. Yulia Yudkina from Stavropolskaya Pravda newspaper asks the question, as far as I understand, she's from Stavropol. According to her, for the southern regions of Russia, a rise in fuel prices is a particularly acute problem because it leads to wholesale prices increases on diesel. Recently, say it was 18.7%, and it raised the costs for the sowing campaign. So the question is, how large is the share of Russian domestic agricultural products and inflation, and how will it affect the costs and the price of new crops? Yes, thank you. We've just discussed that petrol prices is an important factor in terms of inflation expectations, but not just inflation expectations, but also the inflation itself. We have already said, and we believe that the petrol prices increase can lead to additional inflation of 0.1, 0.2 percentage points. What are the main channels for this inflation translation? First, it is the trade, the supply of petrol, the rising costs of entrepreneurs and enterprises, and the third factor about which the question was, that is greater costs of agricultural produce. But the thing is, the share of fuel and the costs of agricultural is quite high. It can be from 3 to 10% in cereals and grains and beans. And that can lead to greater costs. The costs can rise by 1 or 2%. But we do hope that the decisions on decreasing the excise duties and the decisions in anti-monopoly will constrain the prices, but certain effect can still be felt. The share of domestic agricultural produce and retail is quite high. We indeed have seen an import substitution. According to our estimates, it's 75%. So the 75% is the share of domestic agricultural produce. So if the costs rise in production, then it'll be significant. But we still do hope that this effect is going to be limited both in time and overall, too. Thank you. Let's get back to our federal journalists. Yelena, please. Yelena Fabrichna, Reuters Agency. As we can see, the bonds are following. Your statements have turned out to be too harsh for the markets. Can you comment? What are the conditions under which the key rate can be increased? Can you elaborate on that? How probable is it? Will it happen before we transition to neutral monetary policy? I have already mentioned We do not rule out that the key rate can be increased, but this does not mean that the probability is going to be high. Our most probable scenario is as follows. The key rate is not going to be increased. It is going to be decreased, but at a slightly slower rate. So we see a potential for transition to a lower rate, but in a longer horizon, before the end of next year. We have always said that if the inflation risks come to fruition, we are willing to adjust our monetary policy so as to prevent a sustainable and significant deviation of the inflation upward from the target. So a combination of inflationary factors, which right now it is pointless to enumerate, can lead to that. But so far, the basic scenario is not like that. We do not see that in our basic scenario. Gulnara, please. Oh, you announced a new forecast for the oil prices in the basic scenario. Did you revisit it in the optimistic scenario and the risk scenario? Have you revised it? No, the optimistic and the risk scenarios in oil prices have not been revised. It's $69. So we've included the current oil prices. Colleagues, Olga, please. Before the decision, the economists split into two halves as to what to expect from the central bank, and this has not happened since last year. Did you see a split of opinions? You did promise us a real discussion within the Board of Governors before the decision. So what is the message the central bank is sending through its decision? As for the market expectations, they were split into two halves before yesterday, after yesterday's announcements. The opinion of many analysts and experts have started to shift. Our discussions on the key rate have been happening not just today. They have been taking place for the last week. We have been talking to regions. We updated the forecast. And we talked about different scenarios, different options, because there were grounds to decrease the key rate because the inflation is at quite a low level. The response of markets to serious external shocks that took place in April and March was quite moderate, which reveals the resilience of our markets to such types of shocks. Yes, certainly, we talked about different options. But given the new decisions that have been revealed, we have decided to maintain the key rate. We're not going to reveal how we voted. Colleagues, I can see there are more questions, but still another question from a regional journalist, Yevgeny Shumilov from Altaiskaya Pravda. I quote, the Bank of Russia says that it constrains the inflation through its monetary policy instruments, but there is an opinion that the inflation is low not due to Central Bank of Russia, but due to a decreasing purchase power of the population. In Altai region, inflation is a lot lower than in the rest of Russia. Maybe that is because we have the lowest wages in Russia, one of the lowest wages. The Altai region, the Altai Krai, yes. Inflation is growing in Altai with the rate consistent with the general Russian 2.5%. The growth of income is a little bit less. In Russia, it's 3.8%. In Altai Krai, it's 3.1%. But still, it is an increase. That is the figures. But how did we achieve low inflation, not lowering the incomes? That was because the economy slowed down and there was a negative growth even due to a plummeting of oil prices. Plummet in oil prices were one of the most serious factors in the economic growth. We are convinced that lower inflation helps sustain real incomes of the population, and it helps us to prevent the real growth from being eaten up by inflation. Lower inflation sustains the purchase power of salaries, and that is something we see in reality. Thank you. There might be another factor. The region is interesting because its agriculture is quite developed, and this region is renowned in particular for buckwheat, and the development of agriculture helps rein in inflation. Inflation is reined in not just through the prevention of excessive demand growth. It also requires an increase of supply. If supply is growing, inflation is decreasing. Colleagues, please. Anastasia. We know that the government discussed different fiscal and tax options for the last years. Dmitry Anatolievich yesterday announced that they had considered the income tax, the wages tax, but it was decided to increase the VAT from 18 to 20%. Do you think this decision has had the least negative impact in terms of pro-inflationary risks for our country? Or maybe there are other options, increasing other taxes that would have been less detrimental in terms of inflation? The tax measures are assessed not just in terms of their impact on pro-inflationary measures, but also in terms of how they're going to affect the economy and consumption overall. So when comparing different options, you've got to look at the comprehensive effect. Different options have different pro-inflationary effects. The most pro-inflationary effect will have taken place if a sales tax had been introduced. As for the income tax, that is the least pro-inflationary measure. But once again, this is just a restricted assessment. You have to have at the broader picture, not just at the pro-inflationary effect. We believe that the pro-inflationary effect from the increase of this VAT increase is just 0.1 percentage point. Amid the current inflation rates and the current direction of the monetary policy, this will help us achieve our inflation target in the midterm, the target of 4%. We cannot see any big pro-inflationary risks that could be unmanageable. We didn't see such risks. Colleagues, please. Tatiana. Tatiana Monska, Madam Governor, 2 questions, if you'll allow me. First, you said that the government measures might decrease a little bit the GDP in 2019 and then increase the potential. Do you have any preliminary assessments as to how great this increase in the GDP growth rate can happen after 2019? At the International Financial Congress, you called upon the banks to lend not just to traditional enterprises such as oil and gas, but you said that they've got to provide lending to new sectors in order to raise the potential of GDP growth up to 4%. Do you think the monetary policy, the monetary conditions right now are favorable or not? As for the fiscal measures on growth rates, let me reiterate and confirm that calculating the effect takes time. A lot will depend on how fast the positive effect will be seen from the expenses for which taxes are increased. Taxes are not just increased just because we want to. It will create additional revenues for healthcare, for education, and you see a lag is possible. Taxes are increased in 2019, and certain demand on investment goods and other goods can take place in 2020, but the fully fledged effect from the investment program is going to be protracted in time. and we'll have to make assessments and calculations as to how this effect is going to play out. We see a huge advantage because should these measures be accomplished efficiently, this will help us raise the bar of potential economic growth. Right now, the potential economic growth is 1.5, 2%. That is too low for our economy. We have to grow at a faster rate. So we assume that should these measures be completed efficiently, then the expenditure is going to be more efficient. But other structural measures, not restricted to fiscal measures, will also be better, and this will help us increase our economic growth potential. We'll make calculations, and as it becomes increasingly clear, we'll reveal that. As for lending to the economy, indeed, consumer lending is recovering at a faster pace than the lending provided to non-financial organizations. They always speak about household lending and business lending. If we speak in simpler terms, the household lending is increasing at two-digit levels. This does not create concerns, but from the point of view of the economy, it would be better if the lending structure changed and shifted towards greater lending provided to the real sector of the economy. Yes, household lending creates additional demand for domestic goods and for imported goods. Business lending is not always unequivocal in terms of a positive impact on the GDP, because sometimes lending is provided to non-efficient projects, or if property is redistributed, this will not create any additional yields for the economy. So there have to be stimuli for banks to provide lending to the real economy. This does not mean that it'll involve administrative measures. No, we have to decrease risks. Banks see less risks and fewer risks in providing lending to households because the non-performing loans share is not that big. The debts are serviced and households are quite disciplined. But we are thinking about stimulating regulation. We're working together with the government to make it interesting for the banks to provide lending to project financing. And your question, does it have any bearing on the monetary conditions? According to our assessments, the monetary conditions are close to neutral ones, and they do not have any constraining effect on the increase in lending. Thank you. Colleagues, if you'll allow me another question from the regions. Igor Havasik from Chelyabinsk. OTV TV channel would like to know our assessment on the forecast for the mortgage key rates. When will families be able to get a mortgage at 7%? The mortgage rates are already going down, and the recent data that we've got show that they are at 9.7%. Certainly that is bigger than the goal we announced of 7 to 8%. But as inflation goes down, as the key rate goes down, we expect that the mortgage rates are going to climb down as well. This is going to be a steady process. There should be no acute changes, no radical changes. We would like to prevent bubbles from happening in mortgage markets. Right now, mortgage is increasing very fast, but there is no huge debt burden. We understand that for many people, even despite the decrease of mortgage rate, still mortgage is inaccessible, but there are government support programs that help to get a mortgage at even 6%. And yet our overall policy aimed at decreasing the inflation and the key rate, all of that will result in more affordable mortgages. And as a rule, we do hope that we'll achieve 7 to 8% of mortgage rates. Colleagues, thank you very much for very interesting questions. Thank you.